Hello, everyone. Thank you for being on time today. We are going to get started in just a minute. We still got lots of people just accessing the room, so we're just going to give about 30 seconds before we get started. Okay, looks like everybody's in. So I will get started here. Hello, everyone. Thank you for making the choice to invest in yourself and your practice by joining today's CE-accredited financial planning session, How to Get Clients and Prospects Engaged with the Financial Planning Process. My name is Alex Mercer, and I'll be your host today. I'm joined by my colleague, Steve Arnott, Snap's Financial Planning Project Lead, who will provide today's demonstration and run the Q&A. You must stay for the full session today in order to be eligible for your credit. Shortly after the session, you will receive a brief form to fill out via email, which is how you will request your certificate from today. It will say in the subject line, action required for CE credit. So there should be no confusion on that particular email, as we will send out a few different emails also with the resources from today's session. We're also going to have a special offer for those of you who wish to start a free trial and give this financial planning software a try. Before we get started, I just want to do a quick tech check to make sure you can all hear me and see my screen. Can I get each of you to send me a quick yes or even a smiley face through your question tab? Just click the arrow beside the word question and a window will pop up where you can type and hit send. I see a few of you putting your hands up. I'm assuming that means you can hear me. Wonderful, thank you so much. So I'm seeing this from Joanne, Joe, Anna, Glenn, Nathan, Barbara, John, Ed, Laura, Timothy, wonderful. So thank you so much. Glad to know you can all hear me and see my screen. So Steve and I have our cameras turned on just to say hello. We will now shut them off to give you a full screen view of our presentation. Today's session is all about getting your existing advisory clients, as well as your prospective clients, on board with the financial planning process. How do you get that buy-in, that engagement that is such a crucial component of financial planning? If the client doesn't believe in planning or doesn't see the value in it, they're not going to put in the work. They're not going to share their information or provide you with the data you need to move forward. If they don't believe in what you're doing, they're not going to follow your advice. So how do we change the mindset and bridge that gap? It's going to start with doing things differently. You will leave today's session with a proven process to get your existing advisory clients on board with financial planning. You will learn how to get client participation when data collection time comes, and how to lead with financial planning during prospect meetings. At the end of this hour, you will have clarity on how to provide prospective clients with value and start building trust before asking for the business. For those of you who aren't already familiar with Snap Projections, Snap is a Canadian financial planning software platform and part of the CI family. We help great financial advisors grow their assets under management and receive more referrals through effective financial planning. If you're wondering what other advisors have to say after using Snap or how we compare to other solutions, you don't need to look any further than the reviews page on our website. Thousands of Canadian advisors are already using Snap to provide financial planning for their clients and grow their practices. If you're wondering about Snap, asking your colleagues who are already using it is the best place to start. We've got a lot to cover today, so let's get right into it. I want to start with taking a quick look at some research that was recently conducted by the Financial Planning Standards Board. This study found without a doubt that consumers who work with a financial planner are better off, and not just financially. This study found that people who work with a financial planner report having a better quality of life. This research was conducted for the Financial Planning Standards Board by an independent research firm. They surveyed over 15,000 advised and unadvised global consumers. All participants were 25 and older. earned over $60,000 a year, or held more than $35,000 in investable assets. I will include a copy of this full report in the follow-up email I send out after this session. Now, what they found was that financial advice unlocks benefits far beyond wealth. Clients who work with a financial planning professional reported that financial planning has positively impacted their mental health and family life. They also report improved financial well-being, better peace of mind, more financial confidence, a better understanding of financial matters, and greater wealth growth. The study also confirmed that the demand for financial planning is growing. Those between 25 and 40 years old said they consider financial planning a top priority, with 50% saying they plan to engage a financial planner within the next 3 years. So we know the real benefits of financial planning for consumers. The numbers speak for themselves. But how can you bring someone along the journey of wanting to do the work to experience these benefits? How can you convert those curious prospects into clients so that you can deliver this better quality of life? Let's start with your existing advisory clients. The clients I'm referring to are the ones who hold investments with you. They may have multiple accounts across multiple firms, and maybe they've been lukewarm to the idea of financial planning. It seems like they understand the value, but you can never get past sending them your financial planning questionnaire that never gets completed. At the beginning of this presentation, I mentioned the idea of doing things differently. I'm not talking about reinventing the wheel, but what we have found is that simply changing the order in which you do things often has a major impact on client engagement. Now, this process is going to work for both your existing clients and prospects, but the case study we will be working through will be focusing on an existing client who just holds one investment account with us. But all of this is transferable to a prospective client meeting. If you're a fee-for-service planner and do not manage assets, this process will still work for you. So instead of leading with that financial planning questionnaire, we're going to lead with what matters, and that's uncovering your client's vision of what their future and their retirement looks like. Who is included in their plans? Where do they want to live, and what do they want to spend their time doing? Goals-based and cash flow planning will come into play to ensure we can afford the vision. But before you can take your non-planning client from 0 to 60, you need to first help them to create a clear vision of how they want their future to look. That vision, the desire to make it happen, is what will spark excitement and engagement in the financial planning process. I'd like to introduce you to today's case study client, AJ Kahan. This is what his retirement vision looks like. Extensive travel for the first decade of retirement, seeing the world with his adult children before they themselves are tied down with careers and families of their own. It is this vision that fills his heart with joy and excitement for what's ahead. So here is the process we're going to follow today to get clients emotionally invested and interested in creating a financial plan. You will start with creating the vision together with your client or prospect. Once you know what they hope their future will look like, you can use Snap to quickly put a generalized plan together. It's going to be missing most elements because at this point, you still don't know very much. This first draft will allow you to create a generalized idea of whether or not their current state supports making their vision a reality. This part, creating your first generalized plan, will only take you about 5 to 10 minutes in the software, and it can be done in real time with the client or prospect present. So the switch here is moving the financial planning questionnaire ahead in the process. Before we ask for the information, we're helping the client to create their vision and then creating the curiosity with the non personalized plan. So putting this into action, Plan 1 is going to be basic and rely on assumptions and maybe even estimates. We know AJ's annual salary, that he has a pension of some kind, and the balance in the one account he holds with us. That's it. The alignment of Plan 1 with the initial vision we built together is what creates the desire from the client to move on to the second phase. This is where we can build a personalized plan with their completed information that they are now happy to provide. We've created curiosity and engagement, and the client is now emotionally invested in the process of working toward making their future vision their reality. Phase 2 is the time when we ask them to provide us with the missing information we need to complete the financial plan. Often, they're going to offer it up because they now want to see what it will look like with accurate and complete data in their plan. Asking the client to complete a financial planning questionnaire without first building that foundation and interest is often what leads to clients refusing to put in the work to give you what you need to move forward. So we're not necessarily doing anything new. We're simply adjusting the order to get buy-in and engagement from the client before we ask them to invest their time with data collection. We're creating a completely different experience for the client. So how do we help create that vision? It's going to start with asking the right questions. We don't have time to run through all of these suggestions, but I'll make sure to send these out to everyone after the session. You'll notice that some of these questions are very specific, and that's to ensure you can suss out what really matters moving forward. When it comes to asking good questions, it's important to dig deep. When you get a response, follow up with asking why. Why does that matter? What do you mean by that? Or tell me more about your sister. Why is providing for her so important for you? Asking a client about their goals only scratches the surface, and we need to get comfortable with having deeper, more meaningful conversations. This part of the process is crucial because getting buy-in to build the plan hinges on creating this client's unique vision. We've used some of these questions today to help build AJ's vision, and we are now ready for phase 1 of quickly building our first plan in SNAP projections. Now, before I hand it over to Steve, you may be wondering how it's possible to spend just 5 to 10 minutes creating a basic plan. This is possible because SNAP is a financial planning software that was designed with advisors for advisors. We believe there are 4 core elements that are absolute essentials for any good financial planning software. Element number 1 is transparency. When you need to explain something to your clients, you need to first be able to understand it yourself. I talk with advisors all the time who tell me that if they cannot see how the numbers are being calculated, they feel uncomfortable presenting the plan to their clients. It doesn't mean they need to run every calculation, but they need to be able to understand how the numbers were generated so they can conduct an audit if they need to. Some platforms almost seem to hide the calculations, so advisors have no way of verifying the numbers. There's just no transparency. Next comes flexibility, customization, and control. Your clients' lives can be very complex at times, and it can become difficult to model. As the advisor, you need to have a very high level of flexibility and control over the plan if you want to model those lives accurately and make the plan personal for your client. Next, good financial planning software should be easy to learn and easy to use. Lack of ease of use is one of the biggest barriers to software adoption. If it's hard to use and the learning curve is steep, no one wants it. Last, but certainly not least, comes customer support and service. Here at Snap, we provide industry-leading customer support because we know it is a crucial component to your success. We understand that when you need help, you need it right away. Plus, the team will screen share to ensure the best possible experience. If you have used other planning software before, it will come as no surprise to you that screen sharing is not an industry norm in the financial planning software support space. I'd encourage you to compare these response times if you're using a different program right now. So what you're about to see here as I hand this over to Steve is that Snap will show you where the numbers are coming from. You'll see how much flexibility and control you have within the software and how straightforward learning to use the program will be. To run a simple projection and answer some basic questions, we just need to enter a few data points: name, date of birth, province of residence, income, current asset holdings, and any planned contributions. That's it. Now, at this point, we don't even have this much to work with, but that's not going to stop us from doing something generalized that relies on assumptions and estimates to pique AJ's interest. So I'll get Steve to take over now and log into Snap.
Terrific. Thanks so much, Alex, and thank you everyone for joining us today. Snap Projections is a web-based platform, which means that you can access your account from any Chrome browser on any computer without the need for a download. You'll go to snapprojections.com, and then in the top right corner, you'll have the option to log in using your username, password, and the option for a multi-factor authentication. I've entered that during today's call, so I'll click login and go straight into the software. I land initially on the clients page where I can access any of the projections that I've created in the past, or I can start a new plan for my client. So I'll click add new client and we'll start inputting the information for AJ. We have his first and last name, date of birth, and province of residence. In the top left corner of the software, you'll see that there are 3 key phases to creating a projection in Snap. The first is the scenario setup. This is where we'll enter in the key client data, things like our general plan settings, the client's expenses, incomes, and assets. Once we're done inputting the base data, we can proceed to the planning pages where all of that information comes together to show us our client's life on one page. From here, I can change values on an annual basis or for any period of the projection to really customize the plan for my unique client circumstances. When I'm done reviewing and editing the planning pages, I can then proceed to the client report, where I can select which charts, tables, and commentary to include in a final client-facing document. For the moment, we'll continue on with the scenario setup. I'll click next at the bottom, and we'll go to the general settings page. We're going to begin the projection as of 2024 with a target retirement age of 65 and a projection length until age 100. We'll use the FP Canada guideline assumptions for long-term inflation rates. And then with the rates of return, I'll use my default values that I've saved in a previous projection that I created. So all of these values are customizable. You can update them here, and then you can save those settings for any future projection that you create. I'll click next and go to the expense page. So there are a few different types of expenses that you can input into Snap depending on how recurring that expense is expected to be. So with base expenses, these are your annual spending needs that are recurring and expected to continue throughout the client's lifetime. So this would be things like groceries, transportation, property taxes, things that are going to continue even once the client retires. At the moment, AJ's approximated those expenses to be about $50,000 per year. The great thing about Snap, and as we'll see as we continue, is that you don't have to have this information immediately in order to create a base projection. You can always customize these numbers as you get more detail from the client along the planning process. For additional expenses, this is where we can add more detail or goal-based spending needs, such as the additional travel budget that AJ has highlighted within his vision exercise. So we'll add in an additional travel for $10,000 per year. We'll index that at the general inflation rate each year, and we're going to start that at age 65 when AJ retires and run that until age 74. And we'll have it every year, and we'll highlight it in the charts so that we can have a specific discussion around its funding. You can add other expenses such as gifts to kids or a occasional car purchase, And it gives you the ability to combine both recurring expenses as well as one-off or occasional transactions. I'll click next and go to incomes, where I can enter in AJ's base salary of $115,000. I can index this at any given rate, or I can delete the value and index that at the general inflation rate. Now you'll see for this first plan that we're creating, I'm only using information that I already have on file for my client based off of our investment management relationship. So anything that you already have on hand or that's immediately accessible to the client, you can input that base data without needing to include everything that the client ultimately has. This salary is being entered as employment income, so SNAP is automatically going to deduct CPP and EI. It's going to be taxed appropriately, and then it's going to earn additional RSP room. It's going to start in the first year of the plan and then run until the final year prior to the client retiring. If we wanted to, we could add other incomes such as an annual bonus, or if the client has rental income, we can itemize those here. And we can also add defined benefit pension plans with or without a bridge benefit. I'll click next and go to the assets page. You'll see that there's already a default non-registered account added to the projection. This just serves as a location that SNAP can allocate future surpluses in case the client doesn't already have a non-registered account. So I'll leave that here for now, and we'll input the RSP information for the existing account that we manage for AJ. There's $300,000 currently in the account, and it's invested as 40% fixed income and 60% equity. We can see that SNAP has pre-filled our general return assumptions from our previous page and then calculated a total return for the portfolio. If we wanted, we could customize the rate of return for any individual account if the client is expecting a higher or lower rate of return on that particular account. I'll scroll down. We do have the option to enter in a real asset, but we'll wait until we gather the full client questionnaire with information about AJ's home. For now, we'll skip that and go to the debts page. We don't have any existing information about his mortgage. So once again, we'll jump to the next page of the scenario setup, which is the government benefits page. Here we have CPP starting by default at age 65 when he retires, and we have it set to the national average benefit, which is 55% of the maximum. So we can leave this as our starting point for discussion purposes. And then once we're able to complete the client questionnaire, and AJ is either able to access his Service Canada statement in order to gather an exact expectation, or we can approximate his future CPP based off of the discussion around his employment history. Scrolling down, we have the old age security defaulted to 65 with a start age of 100%. And just like that, in about 5 minutes, we've been able to input the existing information that we have for AJ into the software. On the left, you will see that we have additional pages available if needed. We could add insurance policies, conduct life needs analysis to see if more insurance might be required. We can add RESPs, corporations, and also adjust settings to tailor the plan to our client's unique circumstances if and when required. But for the time being, we're going to proceed to the planning pages at the top left in order to see how all of this information can start to come together to show us AJ's life on one page. Now, the planning page can seem overwhelming the first time that you see it, but once you know what you're looking at, it's incredibly intuitive and a very powerful section of the software. On the left-hand side, we have the year and AJ's AJ's age. Then as we continue over, we can see the calculated discretionary expenses that would be available based off of everything that we've input in the plan so far. So what this is telling us is that if AJ's employment income of $115,000 has EI and CPP deductions of $5,100 and is taxed at roughly $26,000, he has about $83,000 remaining for other purposes that we can allocate within the projection. And this is the case up until retirement age, when the software turns on the automatic cash flow management and allows you to set a target spending goal, which is the $50,000 value that we entered earlier. You can customize all of these settings as needed for your plan, but these are the general default settings that work quite well. Continuing on to the right, we can see other key information like the marginal and effective tax rates. And then we can see the accounts that we've entered so far and how the value is expected to grow over time at our input rate of return. At the very end on the right, we have key information about the net worth and any estate and estate taxes. The last thing I'm going to do on the planning page is to enter in the ongoing contributions to the RRSP. So I can click on the contribution in the first year, enter in 18,000, and copy that down until the last year of work. I'll hit the blue check mark, and now we can see that we've applied $18,000 a year contributions for the remaining 6 years of work. In the top right corner, you'll see that the run scenario has now turned red, which means that I've made a change to the plan that has not yet been recalculated throughout all of the numbers. And this is intentional. Rather than constantly changing the numbers on you as you're making edits on the planning page, we wait for you to finish with your edits and then hit run scenario to apply those changes throughout all of the calculations. Now that we've entered in the RSP contributions, for instance, you'll see that the remaining discretionary expense budget has been reduced accordingly. This is now our initial projection, our base projection with very simplified assumptions and missing client data, but it serves as a starting conversation to explain to AJ how we'll be able to use the information that he gathers for us through the client questionnaire to start answering his questions and making very informed recommendations about his next steps. As we review the planning page, we can see in 2030, when he turns 65, he's set to retire with a target base spending of $50,000 a year. SNAP is indexing that forward for inflation. We have the additional travel budget that we input, which has also been indexed for inflation. We can see our national average CPP being received, the maximum OAS value. We can see any taxes being paid, and then we can see withdrawals from the RSP in order to fill the difference between the spending that he wants to do and the resources that he has available through government benefits. And SNAP continues these withdrawals as long as needed in order to try and meet that desired spending goal. And based off of just the RSP alone, we can see that he would run out of money at age 74, and he would start to have an annual shortfall that is not allowing him to spend at his full target amount. So this can help serve as a motivation for AJ to gather his other information like his pension, his home value, his other investment accounts, so that we can enter that information into SNAP and provide a more accurate illustration of where he's headed and whether he's on track for his goals. So again, all that we've done in this process is we've moved the client questionnaire one step back. We've talked initially about a base projection in order to explain to AJ how we're going to use his data to help answer questions and provide value. That's going to help him be more motivated and involved in the process. He's going to be more likely to fill out the client questionnaire with valuable information, and you're going to get a higher value output out of the overall process. And we've heard incredible results from advisors that use SNAP and follow a similar process where they engage their client early and often in the plan creation process. The client feels like the plan is theirs, they're more likely to stick to it, they talk about it with friends and family, and it can serve as a great relationship builder and referral opportunity. So let's rename this scenario title and continue on with the next step. So we'll call this scenario 1, base projection with missing client data. After we're done with this, we can provide AJ with our customized client questionnaire. If you want access to that document, you can find it within our help resources. And that's just a customizable document that's going to allow you to collect all of the information that you need to do a more comprehensive plan. Now we'll copy this scenario so that we have that original to refer to if we need to, and we'll update the title of the new plan to scenario 2, updated projection with full client data and goals. And now we can go back to the scenario setup, go through each page to see whether we need to make any updates based off of the completed client questionnaire. So no updates to the client data or the general settings. For expenses, we'll leave these as are. Employment income we'll leave as is, but we will enter in his pension. So he has a defined benefit pension plan that's set to start at age 65. So there's no values prior to age 65, which is this section, often used for any bridge benefit. And then we have the age 65 and after, which is $15,000 per year. And there's no guaranteed index, so we'll leave that as 0 for the projection. I'll click next and go to the assets page. Now that we've gathered non-registered information from AJ, I'll delete the default that was added by Snap, and I'll input the client's actual account information. So we have $100,000 in a non-registered account, and that's currently held 100% in cash. I'll also enter in the tax-free savings account, which is similarly $100,000 and invested as 40% fixed income, 60% equity. And over the top of the table of accounts, we also have tabs for each of the registered account settings. So as I mentioned a bit earlier, you have the ability to create quick, simple, and conservative projections based off of the default assumptions input in the software. And then if and when needed, you can come into these settings and customize them for your client's unique circumstances. So if AJ had carry forward TFSA room, for instance, we could input that here and Snap would track that going forward in the plan. In this case, we just have the room available for 2024, so we'll leave it as is. We'll go to the RSP RIF tab and update his room to $80,000 based off his most recent notice of assessment. I'll go back to the table of assets, scroll down to the real assets section and input his home, which has a current value of $650,000 and a cost base of $400,000. We can customize the appreciation, which defaults to the inflation rate of the plan, and we can enter in a future purchase age or future sale age if we want, and indicate whether there's any capital gains tax on that transaction. I'll click next and input his mortgage. So we have a current balance of $75,000 with a 5% interest rate and $1,200 monthly payments. And we'll link that to the home so that if we sell the property at any point prior to the debt being repaid, Snap will use the proceeds to finish off any remaining balance. And now I can click next and go to the government benefits page. And now with a bit more data from AJ's Service Canada statement, we can update the expected benefit to 80% of the maximum rather than the national average of 55%. And Snap is automatically going to calculate the expected dollar amount. Or we can enter in the expected dollar amount and Snap would tell us how much that is as a percentage of the maximum. OAS will leave as 65 with 100% of the max. And just like that, in another few minutes, we've been able to update the projection with the new information that we gathered from the client questionnaire. I'll go back to the planning pages and see how those new inputs are affecting the plan. But once again, we have the year and our client's age. We can see that the discretionary base spending has been recalculated for the period prior to the cash flow management starting. As I continue over to the right, I can now see that the non-reg and TFSA have been added to the plan. We have the home tracking and the mortgage with the amount owing and the amount paid. And again, for any of these blue or purple values, I can click on it for a single year and make an accelerated payment, or I can apply the change to a period of time if they want to see how that would impact the overall projection. The last step I'll make is to update the tax-free savings contributions to $7,000 a year, copying down until the year of retirement. And then I'll hit run scenario to apply that to the full projection. In addition to gathering client data through the client questionnaire and ongoing discussions, we may also identify other goals that the client wants to model within the projection. So in this case, AJ has always had the goal of increasing his charitable donations, but wasn't exactly sure about the tax implications and whether his cash flow could handle it. So in this projection, he wants to model using charitable donations to donate about $5,000 a year. So we can enable the dedicated charitable donation module in Snap, which is an added feature that you can enable at any time. It just ensures that there's not too much information on the planning page if you're not using it in a particular projection. So now that we've enabled charitable donations, we'll go back to the planning page. And you'll see that there's some more dedicated functionality to those calculations. We'll go to the cash value, enter in $5,000 a year, and copy that down until age 100. We do have the option to enter in-kind donations from a non-registered account or use insurance products in various ways or enter in simple cash donations. I'll click Run Scenario to apply that change. And now at the top of the charitable donations, I can look at the details table to help AJ understand how those donations are going to impact his overall cash flow. So while he's donating $5,000, after factoring in about $2,000 of tax credits, his net cash flow impact would be closer to $3,000 per year. And now on the left, we can see that with all of the modeling that we've done so far, his base expense value has been adjusted to $43,000. This is essentially what's left over for his everyday recurring lifestyle spending needs. And we're going to assume that that same need is going to continue into retirement. So we'll update our $50,000 original goal to $47,000 throughout the length of the retirement. And now we have a fully complete projection. We have 6 years prior to retirement where he's continuing to work, donate, and contribute to his accounts. Then once he retires, we have a target spending of $47,000 with indexation. We have the additional travel for the first 10 years, and we have his pension, updated CPP, his OAS, and then withdrawals from his investments. And we can see SNAP is defaulting to the non-reg, then using the tax-free savings, then the RIF converts, and then we blend withdrawals from the RIF and TFSA until the end of the plan, at which point there's about $130,000 left over in the capital assets. So in this case, now that we've gathered all of the data and updated his goals, we can say that he is on track for his desired goals, and he does have a bit of buffer at the end of the plan in its current form. We can also review the projection through charts. So we have the chart outflow or the cash outflows where we see the base expenses. Those are the recurring consistent annual needs. We have additional travel that can come and go throughout the plan, income taxes, the mortgage that eventually gets repaid, and then contributions to his capital assets. And then the charitable donations of $5,000 a year. We also have the cash inflows, which shows where the money is coming from, whether it's employment income, pensions, or withdrawals from investments. And we can hover our mouse over any of the legend items in order to focus on that section of the chart. And then we have the net worth, which shows a breakdown of the client's resources over time. And once again, we can interact with that by checking or unchecking legend items and customizing the chart for any specific conversation. So this would just be looking at his liquid net worth over time. And this may be where you stop with your clients, providing them with a very detailed and quite accurate projection of where they're headed. The other option that we have available is to look to optimize this and make strategies around ways that AJ can better achieve his stated goals. So I'm going to copy this projection and do a third scenario where we start to make recommendations in order to apply specific strategies. So I'll call this scenario 3, recommended projection with okay. And so as we've been having discussions with AJ, we might have identified some recommendations to make. The first thing that comes to mind is related to the non-registered account, which is currently 100% in cash. So we could have a conversation about whether there are any specific goals that that's been earmarked for, or whether he would be open to investing it alongside his RSP and his TFSA. If he is open to that, we could go back to the assets page and adjust the asset allocation for that account to be 40% fixed income, 60% equity. And now on the planning page, we can see that the rate of return has been adjusted and the value is higher at the time of retirement. On the right-hand side of the software, we have the estate before tax value, which we can reference. We can click on any individual year to get a breakdown of what resources the client is expected to have at that point in the plan. And then we can compare that with other scenarios. So now we have our first scenario, our second scenario, and our third, and we can see in which scenario is the client better off. So if we look at the estate after tax, which would be the total resources available, we've increased that by about $15,000 through investing the non-registered account over that period. Going back to the projection, another option that might be available for AJ, given that he's a single individual who is partially concerned about longevity considerations, is that we could look to defer his CPP. So we could go to the government benefits page, go to the start age for CPP and change that to 70. And SNAP will automatically adjust the percentage and the dollar amount received. So now on the planning page, we can see that CPP is 0 for the first 5 years, but it increases the dollar amount received from that point forward. If we go down to a future year in the projection, say 2055 when AJ is 90, we could go to the estate before tax value and compare that to our previous projection. So here again, estate after tax, 1.7 million versus 1.6. So we've added quite a bit of value to the overall projection through deferring CPP and investing the non-registered account. The last recommendation that we might make is that during the first 5 years of retirement, if he does defer CPP, his taxable income is quite low and his total taxes payable are quite low. So we may have an opportunity to pull out some money from the RIF prior to the current conversion at age 72. And that's going to prolong his non-reg a little bit and his TFSA in the projection. So we'll go to scenario setup, go to the RSP tab, and then change the conversion age of the RSP into a RIF to begin in retirement. So now we see about 20,000 being taken out per year, which is smoothing out the taxable income throughout the plan. And if we go all the way to the very bottom, we can click on the final estate, which is now 2.04 million, and compare that to the previous estate in our last projection of 1.6. So we've added almost $400,000 in future value through making those various strategies, and we can demonstrate the improvement directly in this comparison. And there's commonly two approaches from here. You can leave that extra buffer in the estate as an illustration of how you've improved the overall situation and increased the likelihood of them achieving their goals. Or you could actually show how they could realize that additional value through increasing their goals. So if we go back to scenario setup and go to the expenses, we could increase the additional travel goal to something like 15,000, for instance. And then back on the planning page, that would get adjusted and recalculated. So now we have a higher travel budget. And if we go to the very end, we can see that there's still an extra 200,000 remaining in buffer, even with him expanding his goals. So once again, summarizing what we've done so far, we created a base projection with very limited information just to get AJ on board and informed about what the process is going to involve. We had him complete the client questionnaire, providing us with the additional data that we needed. We created a second projection to demonstrate all of the known information and how that might track over time. And then we created a third scenario with alternate options and strategies to see which approach might be best for AJ. Now that we're done with the three plans, we can go into the client report of whichever projection we're going to recommend. So in this case, I'll select scenario 3, go into the client report. I can customize which charts and tables to include in the final document. I'll go to report preview. We can see our customizable branding, selected background, a disclosure about the fact that these are just illustrations and not guarantees, key assumptions, and then the charts that we've been reviewing so far. I can then click generate PDF and share that document with the client in a meeting or directly with them. Now, the software does have a lot of capabilities that we haven't demonstrated today. As I showed in the scenario setup, there's things like RESPs, corporations, other account types, and lots of customizable settings. So I would encourage you when you sign up for your free trial to go to our help site, which is available in the top right, go to Help Center, and then access some of our previous webinars. So we do ongoing regular webinars to demonstrate both the capabilities in the software and best practices and use cases for getting the most out of it. You can review any of those here. And then if you have specific transactions that you're looking to model, like entering in an inheritance, you can type in key terms and find an article on how to do that in the software. And if you have any questions, you can reach out to our support team directly by phone, or you can send us an email and pre-schedule a call or ask any questions directly. We also do one-on-one screen sharing if that's going to be most valuable for you. So we do appreciate you joining. I'm going to turn it back over to Alex so that she can take us through a few next steps and then open it up for questions.
Wow, Steve, thank you so much. And yes, as Steve just said, we know that was a lot to absorb in a short period of time, but I hope we've been able to show the value that SNAP projections can bring to your practice and to your clients' lives. If you're still with us here today, you're also going to be receiving a CE credit for this session. So if you're ready to get into SNAP now and try to practice what you have just learned, you can get started with a free trial of SNAP. I'm going to send out the link that will take you to the page you are seeing right now that's just in the chat. So the same way you open up the question box, you can click the arrow on the chat line, and then that will open up there for you. So on our pricing page, you'll see there are 2 plans for you to choose from. The biggest difference between the 2 plans is the advisor business, the main module. It includes the corporate module as well as the option to set up a team. If you have any questions about what plan you need, just ask, and you can upgrade, downgrade anytime. There's no contracts, so you're free to bump around as needed. So please click on that link so you have this page open up on your device before the session closes out. We also have an add-on for stress testing. That is free during your 14-day free trial, so make sure you enable that right away if you want to apply historical or randomized rates of returns to your plans. And you will need to enter your credit card details to create your account and access your free trial, but you will not be billed today. Billing starts at the end of your 14-day free trial, and we also offer a full 30-day money-back guarantee on that payment, so you do get a full month and a half of risk-free trial. And if you decide you love it and you want to stick with it, you can switch to annual billing as well for a significant savings. And we do have one special offer for those of you here with us today, in addition to the CE credit. All live event attendees who register for a free trial within the next hour will be entered into the draw to win SNAP's dedicated onboarding and training package, a $500 value. The winner will receive a 60-minute personalized strategy session, plus be provided with a dedicated support person for 30 days. This means you'll have priority support from a member of our customer success team who will maintain a relationship with you as you learn the program. The winner will receive an email from myself tomorrow morning. And for those of you here today already using SNAP, a reminder that you can be earning free months of SNAP when you send referrals our way. We have recently revamped our referral program to be even more valuable. Referred advisors will now get 50% off their first month of SNAP. If they stay with us beyond their 14-day free trial and 30-day money-back guarantee, you will receive a 1-month credit to your account. That's an entire free month of SNAP projections. If you're on annual billing, you will receive a $100 credit on your next renewal. There's no limit on how many times you can do this. 6 throughout the year would mean SNAP is half off annually for you. We have created a new referrals page that you can access from within your SNAP account to make it easier to access and use this program. All right, with that, let's move on to the Q&A. So bear with me for a second here, just so I can look at the questions. So a few questions about the stress testing feature. The stress testing, and I'll get you to show us it as well, Steve. The stress testing is an add-on, so it's prorated. You only pay for the days that it is active. I believe it's $8 a month if you're on annual billing and $9 a month on a monthly billing. Is that correct, Steve?
Yes.
Perfect. Okay, and
And
Steve will show us the module right now.
awesome. So what I just did was copied the scenario. So you can copy the scenario by clicking on the scenario menu and then hitting copy. There was also a question about renaming. So you can do that either by clicking on the name itself as a hyperlink, or within the menu, you can click rename scenario. So I've copied and then I've renamed so that I have both my recommended scenario and now I'm going to have a stress tested scenario. And what's happening here is right now we're using static annual rates of return based off of our expected going forward, but that's not exactly what the client will experience. So we do want to have a conversation around variable returns and the risk of returns being lower than expected, and also the particular sequence of return that the client might receive. So once you've added the stress testing feature, then you can run either historical scenarios, which would use historical data from 1965 through to today. Any period from that um, that length of time you can apply to your projection, and it would effectively replace your returns and your inflation assumption. Another option is to use randomized. So if I click run randomized scenario, we can see here that Snap is generating a random sequence of future returns where the average aligns with our target, but the year-to-year values will vary based off of historical volatility. So lots of different ways to take advantage of this. We do have an article dedicated to the stress testing feature, and we have a few summary videos that I would encourage you to check out. But what I'm going to do in this case is apply the median potential case. So basically, this is roughly our expected rate of return, and we're going to have variable returns now apply throughout the projection. So we can see here now the rates are 19% for the first 2 years, and then we have some down markets. So overall, we can see that the variable or that the returns are now variable, and that's going to impact the success rate and the outcome of the projection.
Excellent. Thank you, Steve. A few questions around the recording. Yes, everyone who is registered, the video recording will be sent out about an hour after this session ends. And a few questions about Canadian versus American dollars. We are a Canadian company. We are based in Ontario. So the pricing you are seeing is in Canadian dollars. Now, one interesting question here. Do you suggest presenting this to the client with the way that you're doing it, or how would you leverage, the reports, the charts? What are your recommendations for a presentation, Steve?
Yeah, so it's one of the most critical questions to answer as you're starting to use Snap, and we do have actually a dedicated webinar on the topic of presenting Snap to your clients. So once you've signed up, you can access this presenting Snap projections to your clients. We did a bunch of surveys and analysis on what factors typically get included. So there's consideration for your comfort with the software. There's consideration for your client's interest and level of sophistication and detail orientedness. And then there's the complexity of the plan. And those three factors are typically what determine your best approach for presenting this to your end client. If you're more familiar with the software, we have a lot of advisors that screen share exactly as I am right now, and they actually go through the full planning pages with their clients. If you're just getting started with Snap and you want to have time to be able to react to any potential client question or request for a change, then that's when going into the client report and generating a static document can be quite valuable so that you can really focus the conversation on what's been developed so far, and you have time to go back and update the plan if there are any questions or requests for changes. But both options are quite valuable, and they're both outlined in more detail in our dedicated webinar.
Perfect. Thank you, Steve. And another really good question, is there a one-pager we can present? And I'll let you answer that question, Steve.
Yeah, so the exciting news is that very soon there will be. Our product manager sent out an email last year, end of the year, getting feedback on what we're calling the snapshot. So it's going to be a new section of the client report where you can consolidate and really focus the client conversation around a few key pieces of information. If you would like to see more about that, we do have a video on our YouTube channel about the snapshot. It's about 4 minutes in length. And I was just in a meeting prior to this webinar with our product team looking at that feature. So we're continuing to work on it and do expect that to be the next feature that we release.
Perfect. Thank you so much. Okay, so we are just nearing the end of our time here today. So I want to be respectful of everybody's time and make sure we do not go over. So we are going to wrap this up for today. I see there's a few more questions that are still unanswered. They're just very specific technical things for the most part. So I will follow up with each and every one of you via email to make sure all your questions get answered. So thank you so much, everyone, for being here with us today. There's going to be several follow-up emails that come out. I would encourage all of you here to get in there, do a free trial. There's no commitment. And you do get a 30-day money back guarantee. So you're essentially getting 6 weeks of risk-free trial. You can get in there and play around with it and see if you can model some of these things for yourself. So enjoy the rest of your day, and I'm looking forward to continuing the conversation offline. Bye for now.